Yeah, so the U.S. economy, again, it's not Reagan-esque, it's not Clinton-esque, it's not even Bush 2-esque in terms of growth levels. However, and we know there's a lot of negative people out there, but the bottom line is that the U.S. economy continues to get marginally better year over year. If you look from the bottom of the crisis through 2013, we averaged roughly 2% growth per year. This year, it looks like we're going to hit about 2.5%. It may be higher, depending on how the fourth quarter turns out. So that's not great, but it's progress. If you look at next year, given the strength of the private sector, not only job creation, but very marginal increase in wages, which is not as good as we'd like, but is still very real. If you look at the debt levels of the average consumer, if you look at how lean and mean corporate America is, we think the private sector is in the best shape by far that they've been since the crisis, if not going back to the early 2000s. So the private sector is in good shape. And if you look at the public sector, people forget from 2009 to 2013, the public sector was a meaningful drag in the economy. Not only because the federal government embraced austerity in 2012 and 13, but states and municipalities who can't issue debt, they were firing people and cutting costs left and right. So next year is a year where the government should actually turn to a positive contributor as opposed to having no impact or being a drag. So we could see next year being 3%, which again isn't fantastic, but it's enough to keep the economic picture moving forward. It's enough to keep capital markets relatively stable. It's not enough to drive equities up another 50 to 100% from here, but it's one of the principal reasons we think even though gains will be more muted, the current bull market's going to continue.
All investments are subject to risk, including the possible loss of the money you invest. For more information about Skybridge Capital Multi-Advisor Hedge Fund Portfolio Series G, call 1-888-759-2730 to obtain a prospectus. Investment objectives, risks, charges, expenses, and other important information about a fund are contained in the prospectus. Read and consider it carefully before investing. This webcast is for educational purposes only. We recommend that you consult a professional advisor about your individual situation.